The Chinese government has suspended the release of economic data, stoking speculation of a major economic crisis in the third quarter. This comes amid a Congress of the ruling Communist Party, a gathering that happens just twice in a decade. GDP numbers for the world's second-largest economy were scheduled to come out on Tuesday, but the anticipated release has been postponed with no official explanation. Most analysts had expected the data to show a solid recovery from the previous 3 months when China narrowly avoided a contraction. That had been the result of painful lockdowns that were aimed at controlling the spread of COVID-19, but also led to the closure of factories across the country.
Since the start of this year, despite some monthly fluctuations, the Chinese economy has maintained the momentum of recovery and growth. But with solid steps in coordinating the COVID-19 response, the economic and social development, and with the implementation of the policy package for stabilizing the economy, the main indicators of manufacturing, services, investment, and consumption continue to recover. On the whole, the Chinese economy has maintained a momentum of recovery. As far as we know, the economy has clearly rallied in the third quarter.
Now for more on the story, let's go to Stephen Innes. He's managing partner at SPI Asset Management in Bangkok. Welcome back to the program, Stephen. Now, we just heard from a senior official in Beijing there. Should we just take their word for it? What do you make of this delay in the release of economic data?
Yeah, I don't know if I want to take their word for it. I mean, exactly, if there was had good news to share to the world, why aren't they sharing it? But I think these numbers are going to come up below expectations. I think it's going to then turn focus onto the COVID policy, and I think that's the root of all problems in China right now, because the rest of the world, when they came out of COVID restrictions, it was party hardy. So I don't think there's going to be a lot of exuberance post-party Congress like there usually is. Of course, they'll try to get in front of it by making some policy measures, but yeah, it's a bit of a surprise, and very, very unusual. And as you can tell by reading the business publications these days, it's really got the rumor mill churning. So yeah, a little bit negative for risk sentiment over here in Asia.
So, Stephen, if and when this data is released and we're expecting it to show that the economy is not in a good state, what does that mean then for the rest of the Asia-Pacific region, which leans heavily on China in terms of their own economic activity?
Yeah, 100%. We're already pricing in a export recession to Western markets. U.S. economy slowing, obviously the EU economies are slowing, therefore the rest of the world is slowing. There's some hope here that we might be coming out of COVID restrictions in China that might spur up some regional demand. I think weaker economic data will hit on two levels. It'll hit commodity exporters, being Australia, for instance. I think it'll also weigh on Malaysia, for instance, because of their exports of LNG and oil. And for the rest of the regions that tend to export electronics into China and what have you, I think this is going to be a big problem. For exports, it'll probably drive the export recession even deeper over in Asia. And of course, big concern right now is currency weakness. I think that's like the topic du jour right now. So I think we're probably going to see some more currency weakness over in this part of the world, especially if the Federal Reserve keeps on with their hawkish drumbeat right now.
All right. Stephen Innes at SPI Asset Management in Bangkok. Thank you for joining the program.